In this video, guys, I'm going to talk about being patient intraday, and a great example of why you need to be so patient with your setups and be just brutal about when you decide to put your capital at risk. Stay tuned. Hey guys, warm welcome to you. Alright, so coming to the end of the day here, about 20 minutes or so. Another video should be posted up. If it's not, make sure you're subscribed because it will be uploaded very soon. I talked about how I structured this Twitter long based on a pullback. I don't want to talk about that again in this video. I'm going to keep my eye on it though. I've only got 20 minutes left. I want to see how it closes, whether I continue to hold it for the next day. And I may do a follow-up video on that if you guys are interested. Go and check out that video and let me know what your thoughts in that comment section below. What I do want to talk about is specifically Snapchat. Now, this could be anything. This could be Euro USD, it could be gold, it could be copper. It doesn't matter. The point is that this has caught my eye for a long. I've had a long on it already, and I may do a trade review video on that. And talk about kind of the thought process behind. If you'd like me to do that, guys, I'm more than happy to do it. I don't overdo these trade videos, but if you like them and they're helping you out, then that's fantastic. You know, I'm happily sit and review my trades all day long. It helps me, helps you, win-win. So anyway, this is pushed up from earnings, and and I like this kind of setup. I like this kind of thing. This is the prevalent, especially in earnings season at the moment. The gap up or the catalyst, the drive, pullback, trade. Now, I'd already taken a nibble out of this based on this kind of breakout here after the gap up hold, day 3 drive. That's not what I'm going to talk about in this video. What I want to talk about, guys, is, you know, I like this holding. You know, the Nasdaq had taken a little bit of a shudder. If we look at the Qs yesterday, it's recovered a bit today, but yesterday was a bit of a, you know, grimy day for it, and, you know, multiple days lower. It's trying to recover today, fine. So I'm interested in buying some strong stuff. I picked up a little bit of Twitter. You know, I'm just buying stuff that I quite like and it's strong. And I like the fact that Snapchat's done this. It's pulled back and it looks like it might be strong. And I really like when we break through a prior day's low. Now, you know, should I have bought it? Well, let me just kind of frame that idea first, guys. Is when you holding and it's strong, I don't think anyone can doubt the daily chart is strong on this. You know, I like to buy when it breaks through a prior day's low and then push higher. Now, that means this is the low that I'm looking at. You know, I'm looking at this low, and this is what I call the prior day's low. Right on this point here, we're looking at a low of 91. Now, we started to break that kind of pretty early on the first 15 minutes. We went to 80. And, you know, I wasn't taking the trade because I tell you why I wasn't taking the trade, guys. I'm brutally honest with you. I wanted to make sure the Nasdaq wasn't going to just slam through the prior day's low. I'd already kind of, you know, been positioned or looking to position long on some things. I just don't want to overdo it. We're not in a trending bull trading environment. We're in a range bound environment. We've got elections coming up. I don't want to start over extending my risk on long tech plays. Happy to do that. Happy to kind of trade them intraday, hold for a couple of days. But I'm mindful that this isn't the environment to start swinging, you know, large portion of capital into the same idea and multiple things, because the Nasdaq could just shudder again, and you're going to get stopped out on all your plays. So, you know, I want to see what happens first with the Nasdaq, and I just wasn't sure, to be frank, and I'd rather miss it, you know, than do that. Anyway, the point is, I was looking for a break of lows, and now I'm looking for the rest of the day. My ideal scenario for this Snapchat, I've got a bullish thesis. My ideal scenario for this, if I get my little pen out, is to see us push through the low, recover, and then find a bid. I'm all over that because, as you know, I love to have quantified my risk. I don't mind so much anything else, but, you know, something that I really kind of, it's just so simple, guys, but it just helps so much, is filtering your trades using some form of trigger. Again, this is the method that I kind of it's just adding these layers of edge and then going, right, well, can I then get a trade that's got a good risk reward ratio? And if I can, I'll take it all day, every day. I you know, even if I'm 50-50 on it, and it won't be because it's got the wind behind it. I've got these filtering criteria. But even if it is, the risk reward ratio more than makes up for it. I know you've heard that so many times before, guys, but I can't stress enough how this just makes trading so much more relaxing. So much more comfortable. Even if you have multiple losers in a row, you don't mind. You're like, it doesn't matter. The risk is so low. Every now and then you get a monster run. You get a 5-1. It's a much you know, more confident way and comfortable and certain way of trading, and that's what I'm looking for. For a break to lows, push to highs, I will take that all day, every day. And we just didn't get it. Apart from that one in the morning while I was waiting for the Nasdaq to kind of decide what it wanted to do. I'm still looking for. I'm like, fine, Nasdaq's holding, broader market's holding, game on, game on, game on. Filters, tick, tick, tick. Grade the trade, good. Got a reasonable price target for the deal as well. 45 will be fine. Prior high, somewhere around there, fine. You know, if I can take a dollar risk on this, $4 worth of reward, $3 worth of reward, that's a great starting point. And it's not even going to be $1 worth of risk. If we take out the low here, push back up, it's probably going to be 50 cents worth of risk because it's a 40.50. Anyway, I'm sitting, I'm watching this thing as it's approaching this low here, and it, you know, it just didn't go through enough. And you know, when I see it rip off like this, it's like you guys, the first thing in my mind is I've missed this. But I've been through enough trades to know there's no way I'm chasing this. I'm not. You kind of have to have the standards and go, I'm just not chasing it. Yeah, do I wish I'd been on that for a quick kind of run up and been able to decide what to do with it? And yes, it's come back, but that's by the by. At that point in time, you know, it's ripped up from 41 to 50 in 10 minutes, and you think, well, that'd be a nice little cushion. It's like a 50-cent cushion that probably had the risk off the table. You know, could have been nice to be getting it. It would have been nice to get in it, should I say? But you've just got to shrug your shoulders and go, that's not what I wanted. I wanted the price to come through that low properly, maybe even to 40.50, maybe to 40.60, 40.70. Whatever it is, it's got to be through this low properly with a wick and then come back up, because I can frame my trade. I refuse to take it here, because if it goes lower, I'm just going to be holding it thinking, where's it going to bounce? I need the fake out to the downside, the push up, so I can frame the trade. That's the key important thing, guys, is being able to frame the risk. It doesn't matter so much about the strategy and the time frame and all this stuff. What matters is that I can see something and frame my risk over it. Now, am I right about this? Is this how everyone should trade? No, but it works for me, and it gives me peace and comfort knowing, hey, that's a sensible place for a stop. We've wicked through, we've done a big wick here, and we've pushed back up. Why would I not want to have my stop there? I've got the wind behind me with the strength on the daily. I've got the support here. I've got the fake out evidence. I'm stacking these layers of edge one by one by one by one. I'll take the deal all day, every day. 50-cent stop. Where's my target going to be? Well, I'm quite happy to see if it hits the highs. Let's see, of course, where it closes. Let's see, of course, where it does on the second day follow through. Mindful of elections, mindful of looking for home runs in the current environment. But, you know, that's what I'm looking for. And do I wish I'd been in that to be able to take a quick 50 cents? You know, wish is a bit of a strong kind of phrase to say. I don't really, but did I look at that and go, oh, I wish I'd been in that? Would I like to have been in that? Yes, of course. But it didn't set up, so I just wait for it to set up. I'm still waiting now for you to do this and do that. I don't think it's going to do it today, and if it doesn't, I'm going to take it anyway. It's 10 minutes before the close. Let's see what happens on day 2 or day 3, really. But in reality as well, it's going to have to do it pretty quick in the morning. I want to see this tomorrow go lower, flush out, and then pull back up. And then I might take it. If it minces about for the rest of the day, doesn't do a lot, and sits there and then drifts, I'm not having it. I'm not interested. I talked about that with kind of a JKS trade that I covered, closed out for a tiny profit, basically a scratch. And that'll be uploaded soon if it hasn't been already. So a lot of lines on there, guys. Let's clear some of that off. So kind of the point of the video is this: being patient, being absolutely 100% strict about what you're looking for, not deviating, but just look. If I'd have chased that in and gone, oh, that's it now, that was what I was looking for, it's going to go, and I bought that, where my stop got to be? It's got to be under here, it's got to be reasonably wide, and it pulled back and I've been upset by it. You know, I think you've got to be strict. You know, and I appreciate, guys, this is where experience comes in, and nothing kind of substitute for experience, but hopefully little things like this in the back of your mind and your standards and your kind of core values, and you go, I'm not a trader who chases stuff that hasn't set up for me. I'm not a trader who just dives in because I've seen something nearly trigger. I'm a trader who waits for a very specific pattern, very specific set of criteria, and then pulls a trigger. And that's the key to the game in some respects. So anyway, guys, yeah, I'm waiting for this. Who knows what's going to happen with that trade? Let's have a look at Twitter. Twitter's okay. I will hold that for tomorrow now, unless it does a complete capitulation in the last 10 minutes. But I talked about that trade in more detail in the video, so go and check it out if you're interested. If you like this kind of trade reviews, guys, thumbs up appreciated. Always interested to hear what you guys have got to say about this kind of stuff. And yeah, stick around if you're new here. Maybe consider subscribing for more videos like this. Do some on the whiteboard, do some on the screen, and we'll talk about all sorts of trading, and hopefully it helps you out. Take care. Bye bye.